Question 1. In North Carolina, which of the following is NOT typically covered under a standard owner's title insurance policy? A. Unrecorded liens that may affect the property. B. Forgery of a deed by a person who had been a trustee. C. Encroachments from neighboring properties. D. Errors in public records affecting title validity. Answer C. Explanation. A standard owner's title insurance policy typically covers issues such as unrecorded liens, A. Forgery of a deed by a person who had been a trustee, B. And errors in public records, D. However, encroachments from neighboring properties, C. Are generally not covered under a standard policy. Encroachments may require an extended coverage policy or a separate survey endorsement to be addressed. This distinction is important to understand the limitations of standard coverage and when additional coverage might be necessary. Question 2. Which of the following statements about the Title Insurance Act (GS), Chapter 58, Article 36 is accurate? A. The Act mandates that all title insurance policies must include extended coverage for encroachments. B. The Act requires title insurance companies to file a detailed report of their financial status annually with the North Carolina Department of Insurance. C. The Act specifies that title insurance premiums are set by the North Carolina Insurance Commissioner based on market competition. D. The Act includes provisions for handling claims related to fraudulent transactions discovered after policy issuance. Answer B. Explanation. Under the Title Insurance Act (GS), Chapter 58, Article 36, title insurance companies are indeed required to file a detailed annual financial report with the North Carolina Department of Insurance. B. The Act does not mandate extended coverage for encroachments. A. Does not set premiums based on market competition. C. And does not specifically address handling claims related to fraudulent transactions discovered post-issuance. D. It highlights the regulatory framework's focus on financial transparency rather than specific coverage or claims management. Question 3. Scenario question. Mrs. Johnson is purchasing a property and has just received a title commitment from the title insurance company. The commitment lists a previously recorded mortgage on the property that has been satisfied but not yet officially removed from the public records. What should Mrs. Johnson do to ensure her title insurance policy provides coverage for this issue? A. Request a written assurance from the title insurance company that the mortgage will be removed from the records before closing. B. Proceed with the closing as planned since the mortgage satisfaction is already recorded. C. Obtain a formal release of the mortgage from the lender and provide it to the title insurance company. D. Pay an additional premium for extended coverage to cover any potential issues arising from the old mortgage. Answer A. Explanation. Mrs. Johnson should request a written assurance from the title insurance company that the mortgage will be removed from the records before closing. This ensures that the title insurance policy will not have to cover any issues arising from the old mortgage if it is not officially cleared from public records. Simply proceeding with the closing, B, or obtaining a formal release, C, does not guarantee that the title insurance company will cover potential problems. Paying an additional premium for extended coverage, D, is not necessary if the title insurance company provides assurance that the mortgage will be addressed. This process ensures that the title policy will protect Mrs. Johnson from any claims related to the mortgage in question. Question 4. Which of the following best describes a chain of title in the context of title examination? A. A document listing all previous owners and their respective dates of ownership. B. A series of recorded documents proving the ownership history of a property. C. An abstract summarizing the legal description of the property. D. A checklist used to ensure all title defects are resolved before closing. Answer B. Explanation. A chain of title refers to the series of recorded documents that prove the ownership history of a property. B. This chain tracks the transfer of title from the original owner to the current owner, showing all intermediaries and their respective ownership periods. It is crucial in title examination to ensure there are no gaps or defects in the title history. Options A and C are related but do not fully describe the chain of title, while D refers to a process rather than the chain itself. Question 5. In North Carolina, which of the following is a requirement for title insurance companies under NCDOI regulations? A. Title insurance companies must offer a refund to the policyholder if the title is found to be defective after issuance. B. Title insurance companies are required to maintain a minimum net worth as prescribed by the North Carolina Department of Insurance. C. Title insurance companies must provide a free policy review to all prospective clients before issuing a commitment. D. Title insurance companies must disclose all potential title defects in the initial policy commitment. Answer B. Explanation. Under NCDOI regulations, title insurance companies are required to maintain a minimum net worth as prescribed by the North Carolina Department of Insurance. B. This requirement ensures the financial stability of the companies. Refunds for defective titles A and free policy reviews C are not mandated by regulations, and disclosure of all potential title defects D goes beyond what is typically required in the initial policy commitment. Question 6. Which of the following scenarios requires a title insurance policy endorsement in North Carolina? A. A recorded easement affecting the property's use. B. A zoning change that impacts the property's value. C. A newly discovered lien from a recent tax assessment. D. A boundary dispute with a neighboring property owner. Answer D. Explanation. A boundary dispute with a neighboring property owner. D. Often requires a title insurance policy endorsement. This endorsement provides coverage for disputes regarding property boundaries that may not be covered under a standard policy. Recorded easements A and zoning changes B are typically addressed through standard policy provisions or separate disclosures. Newly discovered liens C may be addressed through a standard policy if they arise before the policy issuance. Question 7. Under the North Carolina Title Insurance Act, what is required for a title insurance company to handle a title claim? A. The title insurance company must notify the North Carolina Department of Insurance immediately upon receiving a claim. B. The policyholder must provide proof of the title defect's impact on the property's market value. C. The title insurance company must respond to the claim within a specified time frame, usually 30 days. D. The title insurance company is obligated to cover the entire amount of the claim without any investigation. Answer C. Explanation. The North Carolina Title Insurance Act requires that title insurance companies respond to claims within a specified time frame, typically 30 days. C. This time frame allows for timely resolution of claims. The company is not required to notify the NCDOI immediately upon receiving a claim A, nor must the policyholder prove the defect's impact on market value. B. The title insurance company is not obligated to cover the claim without investigation. D. Rather, they must investigate and determine coverage based on policy terms. Question 8. What is a key difference between a standard title insurance policy and an extended title insurance policy in North Carolina? A. Extended policies provide coverage for zoning issues not covered under standard policies. B. Standard policies include protection against unrecorded liens, while extended policies do not. C. Extended policies offer coverage for issues such as encroachments and certain off-record matters. D. Extended policies are typically less expensive than standard policies due to fewer coverage details. Answer C. Explanation. Extended title insurance policies provide coverage for issues such as encroachments and certain off-record matters, which are typically not covered under standard policies. C. Standard policies generally do not include this extended coverage and focus on recorded matters only. Zoning issues A are usually not covered under either policy type. Extended policies are generally more expensive due to the additional coverage. D. Question 9. If a title insurance company discovers a defect in the title after issuing a policy but before the closing of the transaction, what action is the company most likely to take? A. Notify the seller to resolve the defect before closing. B. Adjust the policy premium to reflect the defect. C. Amend the title commitment to exclude the defect from coverage. D. Require the buyer to assume responsibility for the defect through a policy endorsement. Answer A. Explanation. If a defect is discovered after issuing a policy but before closing, the title insurance company will typically notify the seller to resolve the defect before closing. The company does not adjust the premium B or exclude the defect from coverage C, but rather seeks to address the issue to ensure the title is clear. The buyer is not usually required to assume responsibility through an endorsement D in this scenario. Question 10. In the context of title insurance claims, what is the primary purpose of a title commitment? A. To provide a summary of all potential title defects and their resolutions. B. To outline the terms under which the title insurance company will issue a final policy. C. To detail the process for resolving any disputes that arise after policy issuance. D. To list all parties involved in the title transaction and their respective interests. Answer B. Explanation. The primary purpose of a title commitment is to outline the terms under which the title insurance company will issue a final policy. B. It includes the conditions that must be met before the policy is issued and identifies any title issues that need to be resolved. The commitment does not summarize all potential defects. A. Detail dispute resolution processes. C. Or list all parties involved. D. In its primary function. Question 11. Which of the following is typically covered by a lender's title insurance policy in North Carolina? A. Errors in the legal description of the property. B. Unrecorded easements affecting the property's use. C. Claims arising from fraud or forgery in the chain of title. D. Structural defects or physical issues with the property. Answer. A. Explanation. A lender's title insurance policy typically covers errors in the legal description of the property. A. As this can affect the lender's ability to enforce its lien. Unrecorded easements. B. And claims of fraud or forgery. C. Are not typically covered unless specifically endorsed. Structural defects or physical issues. D. Are not covered by title insurance but may be addressed by a home inspection or other insurance. Question 12. What is the purpose of a title insurance endorsement in North Carolina? A. To modify the coverage of a standard title insurance policy to address specific issues. B. To cancel the existing title insurance policy due to a change in the property's ownership. C. To provide a new title insurance policy for a property that has undergone significant changes. D. To waive the title insurance policy's premium for a period of time. Answer. A. Explanation. A title insurance endorsement is used to modify the coverage of a standard title insurance policy to address specific issues or risks not covered by the standard policy. A. It does not cancel the policy. B. Provide a new policy. C. Or waive the premium. D. Question 13. Which of the following would typically not be considered a valid reason for a title insurance claim under North Carolina regulations? A. A previously undisclosed lien that surfaces after policy issuance. B. A boundary dispute with a neighbor that arises after closing. C. An error in recording that affects the chain of title. D. A dispute over the property's market value discovered after policy issuance. Answer. D. Explanation. A dispute over the property's market value discovered after policy issuance. D. Is generally not a valid reason for a title insurance claim. Title insurance covers issues related to defects in the title or errors affecting ownership. And C. But not disputes over value or market conditions. B. Question 14. In the context of North Carolina real estate transactions, which document is typically used to verify the legal description of a property? A. Title commitment. B. Warranty deed. C. Property survey. D. Title insurance policy. Answer. C. Explanation. A property survey. C. Is typically used to verify the legal description of a property, including boundary lines and physical dimensions. The title commitment. A. Outlines the terms and conditions for issuing a title policy. The warranty deed. B. Transfers ownership, and the title insurance policy. D. Provides coverage but does not verify the description. Question 15. Scenario question. Mr. Davis is closing on a property that has a recorded but unpaid judgment lien against the seller. The title insurance company has not yet addressed this issue. What should Mr. Davis do to protect his interests? A. Negotiate with the seller to pay off the judgment lien before closing. B. Proceed with the closing and rely on the title insurance policy to handle the lien. C. Obtain an endorsement to cover the judgment lien in the title insurance policy. D. Request that the title insurance company exclude the lien from coverage in the policy. Answer. A. Explanation. Mr. Davis should negotiate with the seller to pay off the judgment lien before closing to ensure that the lien is resolved and does not affect his ownership. Relying on the title insurance policy. B. Is not advisable until the lien is addressed. Obtaining an endorsement. C. Or requesting exclusion. D. Does not resolve the underlying issue and could still leave Mr. Davis vulnerable. Question 16. Which of the following is considered an acceptable method for resolving a title defect in North Carolina? A. Securing a written agreement from all parties to ignore the defect. B. Providing proof of a title defect to the North Carolina Department of Insurance for resolution. C. Correcting the defect by recording the necessary documents to clear the title. D. Paying an additional premium for a new title insurance policy. Answer. C. Explanation. The acceptable method for resolving a title defect is to correct the defect by recording the necessary documents to clear the title, C. Ignoring the defect, A. Or involving the Department of Insurance, B. Is not a valid resolution method. Paying an additional premium, D. Does not resolve the defect itself. Question 17. In a title insurance policy, what is typically excluded from coverage under the standard exclusions in North Carolina? A. Environmental hazards on the property. B. Claims resulting from zoning violations. C. Unrecorded liens discovered after policy issuance. D. Errors or omissions in the legal description. Answer A. Explanation. Environmental hazards on the property, A, are typically excluded from coverage under a standard title insurance policy. Claims from zoning violations, B, and unrecorded liens, C, may be covered under extended policies or endorsements, and errors in the legal description, D, are generally covered. Question 18. What is the primary responsibility of the North Carolina Department of Insurance concerning title insurance companies? A, to approve the rates charged by title insurance companies. B, to monitor and ensure compliance with state regulations by title insurance companies. C, to resolve individual title insurance claims on behalf of policyholders. D, to underwrite and issue title insurance policies for real estate transactions. Answer B. Explanation. The North Carolina Department of Insurance is responsible for monitoring and ensuring compliance with state regulations by title insurance companies. B. The department does not approve rates. A. Resolve individual claims. C. Or underwrite policies. D. Question 19. Which of the following types of title defects is covered by a title insurance policy with extended coverage in North Carolina? A. Claims arising from a forgery that occurred prior to the policy issuance. B. Defects discovered after closing but not included in the title commitment. C. Encroachments or survey-related issues that are not recorded. D. Pre-existing easements that are not disclosed in the public records. Answer C. Explanation. A title insurance policy with extended coverage in North Carolina typically covers encroachments or survey-related issues that are not recorded. C. Claims from forgery, A, are covered under standard policies if discovered before policy issuance, while defects discovered after closing, B, and pre-existing easements, D, may not be covered unless specifically endorsed. Question 20. What is the purpose of a title insurance commitment in the title insurance process? A. To finalize the terms and conditions of the title insurance policy after closing. B. To outline the specific conditions that must be met before issuing a final title insurance policy. C. To cancel the title insurance policy if defects are found before closing. D. To provide a temporary coverage option until the final policy is issued. Answer B. Explanation. The purpose of a title insurance commitment is to outline the specific conditions that must be met before issuing a final title insurance policy. B. It does not finalize the policy. A. Cancel it. C. Or provide temporary coverage. D. Question 21. Which of the following is NOT typically considered a title defect that a title insurance policy should address? A. A mortgage lien that has been paid off but not yet released. B. An undisclosed zoning violation affecting property use. C. A discrepancy in the seller's marital status affecting property transfer. D. A building code violation for renovations made by the property owner. Answer D. Explanation. A building code violation for renovations, D, is generally not covered by a title insurance policy. Title insurance typically addresses issues like unpaid mortgage liens, A, undisclosed zoning violations, B, and discrepancies in the seller's marital status, C, that impact the title. Question 22. Which North Carolina statute governs the regulations for title insurance companies operating within the state? A. Title Insurance Act, GS, Chapter 58, Article 36. B. Real Property Act, GS, Chapter 47. C. Insurance Regulation Act, GS, Chapter 58, Article 50. D. Property and Liability Insurance Act, GS, Chapter 58, Article 65. Answer A. Explanation. The Title Insurance Act, GS, Chapter 58, Article 36 governs the regulations for title insurance companies in North Carolina. A. Other statutes mentioned pertain to different areas of insurance or property law. Question 23. What is the primary function of a title search in a real estate transaction in North Carolina? A. To verify the current market value of the property. B. To identify any liens, encumbrances, or defects that may affect the title. C. To assess the property's compliance with local building codes. D. To establish the boundary lines and physical dimensions of the property. Answer B. Explanation. The primary function of a title search is to identify any liens, encumbrances, or defects that may affect the title. B. It does not assess market value. A. Building code compliance. C. Or boundary lines. D. Question 24. Scenario question. MS. Thompson is purchasing a property and the title search reveals a deed of trust that was not disclosed by the seller. The deed of trust is still active and recorded. What should MS. Thompson's title insurance company do in this situation? A. Issue the title insurance policy and exclude the deed of trust from coverage. B. Notify MS. Thompson to renegotiate the purchase price to account for the deed of trust. C. Resolve the deed of trust by ensuring it is paid off before closing or provide an endorsement covering it. D. Advise MS. Thompson to proceed with the purchase without addressing the deed of trust. Answer. C. Explanation. The title insurance company should resolve the deed of trust by ensuring it is paid off before closing or providing an endorsement covering it. C. Issuing the policy while excluding the deed of trust. A. Or advising to proceed without addressing it. D. Could leave MS. Thompson with unresolved issues. Renegotiating the price. B. Does not directly address the title issue. Question 25. Which of the following is an example of a title insurance policy endorsement that could provide additional protection? A. An endorsement that extends coverage to include unrecorded easements. B. An endorsement that increases the policy's coverage limit for structural defects. C. An endorsement that guarantees the accuracy of the legal description. D. An endorsement that covers claims resulting from a foreclosure. Answer. A. Explanation. An endorsement that extends coverage to include unrecorded easements. A. Provides additional protection beyond the standard policy. Increased coverage limits for structural defects. B. Accuracy of the legal description. C. And foreclosure claims. D. Are typically not addressed by standard endorsements. Question 26. What role does the abstract of title play in the title examination process? A. It serves as a summary of the property's market value and condition. B. It provides a chronological summary of the property's ownership and legal interests. C. It contains a detailed description of the property's physical boundaries. D. It outlines the insurance coverage and exclusions provided by the title policy. Answer. B. Explanation. The abstract of title provides a chronological summary of the property's ownership and legal interests. B. It does not summarize market value. A. Physical boundaries. C. Or insurance coverage. D. Question 27. What is a primary purpose of conducting a title examination before issuing a title insurance policy in North Carolina? A. To verify the physical condition and structural integrity of the property. B. To confirm the seller's financial status and ability to complete the sale. C. To identify any potential defects or claims that could affect the property's title. D. To ensure compliance with local zoning and land use regulations. Answer. C. Explanation. The primary purpose of conducting a title examination is to identify any potential defects or claims that could affect the property's title. C. It does not involve verifying physical condition. A. Seller's financial status. B. Or zoning compliance. D. Question 28. In North Carolina, which entity is responsible for handling disputes related to title insurance claims? A. The local county clerk's office. B. The North Carolina Department of Insurance. C. The North Carolina Real Estate Commission. D. The North Carolina Supreme Court. Answer. B. Explanation. The North Carolina Department of Insurance is responsible for handling disputes related to title insurance claims. B. The County Clerk's Office. A. Manages public records. The Real Estate Commission. C. Oversees real estate practices. And the Supreme Court. D. Is not involved in administrative disputes. Question 29. Which of the following situations would most likely require the use of a title insurance endorsement? A. A claim related to an existing mortgage that was not disclosed. B. A boundary dispute with a neighbor discovered after closing. C. An unrecorded easement that affects the property's use. D. An issue with the property's market value identified after purchase. Answer. C. Explanation. An unrecorded easement that affects the property's use. C. Would most likely require the use of a title insurance endorsement to provide additional coverage. Existing mortgage claims they should be addressed before issuing the policy. Boundary disputes. B. And market value issues. D. Are generally not covered by endorsements. Question 30. What must a title insurance policy typically include to be considered valid in North Carolina? A. An endorsement for each potential risk identified in the title search. B. A clear statement of coverage limits and exclusions. C. A guarantee of the property's future market value. D. A clause that provides automatic renewal every year. Answer B. Explanation. A title insurance policy must include a clear statement of coverage limits and exclusions. B. To be considered valid. It does not require endorsements for all risks. A guarantee of future market value. C. Automatic renewal. D.